Hello guys. Okay, this is my second video on IFRS. Here I'm gonna take you and I will provide you a bird eye view of the IFRS standards. If someone wants to learn IFRS, someone wants to excel IFRS, how it should work, means how it should process, how you should proceed toward understanding those IFRSs, because IFRS is very wide. So I'm giving you a brief idea about in nutshell how the IFRS process moves. For example, the first thing one should go for is, for example, there's one situation, they are first time adopter. So when you adopt the IFRS for the first time, now as in my previous video I explained that any gap any gap, IFRS is an accounting standard, right? So it's a package of accounting standards and interpretations. When you apply IFRS, previously you were applying your local GAAP. It contains certain accounting policies. It contains accounting policies as well, which is not similar to the IFRS. So in my point of view, when you apply a new GAAP, you apply IFRS or any other GAAP from your previous GAAP. You just make changes in your accounting policies. Accounting policies are primarily compilation of the treatment that you're going to do to a particular transactions. For example, depreciations, goodwill amortizations. Goodwill is not going to be amortized as per IFRS, but as per previous local GAAP, it has to be amortized. And in IFRS, we test it for impairment. That's a shocking thing, indeed. So look, when you apply a new standard, it's just a change in your accounting policies. So there are treatment that you need to be changed, or there are something. For example, if you want to continue your treatment, that's why there's something called IFRS 1. The IFRS 1 stands for the transitional provisions. Transitional provisions. When you transition to IFRS, there are changes in your accounting policies. So how we're going to deal with those accounting policies will cover under IFRS 1 is for a first time adopter. When you read the standards are saying the IFRS 1 first time adoption. It means when you apply IFRS for the first time, what are the transition exemptions available for you? I'll give you one very simple example. For PP&E, property, plant and equipment, you might be using a cost model where you want to use cost model, but you want to use the fair value as on the date of transition as your cost, as your deemed cost. So IFRS 1 gives you two advantages here. IFRS 1 you can use for PP&E as it all happens as per IFRS as on the date of transition. One should be very careful about this. I'll explain to you after this. For example, okay, I'll explain to you now only. When you think about the transition date, for example, you're applying IFRS here 2016, so your transition date will be 1/1/2014. Why 1/1/2014? Because when you apply IFRS for the first time, then in such a case you need to show the comparative accounts. Yes, right? You need to show your comparative accounts for this year. This will become your transition date. I'll explain more on transition date, but let me focus on this now, and I don't want to deviate. Cool. So IFRS 1 gives me two options. Either I can go for cost, or you can use a deemed cost for PP&E. There are multiple non-current assets for this offering available, but now I'm only discussing with for the PP&E part. You can use the cost, which means your previous book value that you had in your accounts will become the current year cost. You will measure at cost, either cost or deemed cost. For example, you might be valuing your fixed assets, your PP&E on the basis of cost. then now you can use that cost as the current year's cost as per the transition provision. You change like this. Or what you can do is, previously if you're valuing at the revalued amount, revalued amount or revaluation reserve you have, you might do treat as a deemed cost and record it, the balance, the carrying amount, as your cost rather than revaluation. Any balance there in the revaluation reserve will be transferred to retained. It's a scenario. I will explain all this thing when I'm covering IFRS 1. So when I'm explaining that, in a nutshell, look, when you are applying IFRS for the first time, what will happen is there are some changes in your accounting policies. For this, IFRS 1 is applicable. And for PP&E, it's a short example. What you can do is, for your financial statement as on the date of transition, what you can do is you can take the cost. You can take the cost of PP&E which was there in a financial statement, or you can do one thing. You can use a deemed cost. The cost which is not a cost, which means a deemed cost. It's confusing, right? Indeed. But what can we do? It's a part of IFRS. So it's a deemed cost, which means previously we are using as a revalued amount. Now you can use that revalued amount as cost. I'll give you one example when I will teach IFRS 1. So it's a basic thing. Suppose this is a timeline IFM draw. This is the stage. This is the stage for the IFRS. This is first time you are applying IFRS. So the first thing will go, you'll prepare an account financial statement, but before that you need to apply IFRS 1 for your first time adopter. Now what you're gonna do is you will acquire some assets, right? So for example, you are a manufacturing entity. What are you gonna do? You will acquire some assets, yes. So based on your intention, this is an asset. Based upon your based upon your intention. Okay, I'll cover this in the next video. Thank you guys.